This one is getting a lot of headlines. So what it is not no tax on Social Security. What this is an increased deduction for individuals who are age 65 and older. And it is $6,000 per person. And it is only in place for a 4-year window. This also has a phase out for individuals who are starting to get over $150,000 for those married couples. So again, we're not going to see this eliminate a lot of people's Social Security, but it might include more. And so if you are currently collecting Social Security, it's important to understand that the way that the tax law has been and continues to be is that there's a tiered system for where you pay tax on certain levels of your Social Security. If you have no other income other than Social Security for which you receive annually, then you likely are not paying tax on the receiving of that Social Security. But as you go through these different phase out periods, if you have other sources of income, you generally are paying tax on up to 85% of what you receive in Social Security. So now what this additional tax deduction does is comes in and tries to mitigate some of that tax burden. However, it's important to understand that the qualification for this deduction is your age and not actually whether you're receiving Social Security or not. So that's an important distinction that I think we need to understand. Just because you're on Social Security, you might be under age 65, in which case you're not going to qualify. You also may be at age 65 or older, but not yet collecting Social Security, and you would get this deduction. This is for seniors. Seniors are defined as age 65 and older, and it's up to it's a $6,000 deduction